every single one of you has a problem that can be solved right here, right now. We want to become the bank. We set up our own private banking system.
When you build a warehouse of wealth inside of your infinite banking system, what we teach is let's take that money and let's put it to work. Well, we can structure a program for you to do the same thing where we pay your debts off, and then when the debts are gone, we take that cash value, put it to work.
Welcome everybody to week number 3 of March Money Madness. I'm so pumped on this series. You know, it's like I was just out in Texas and on every TV where we ate lunch was March Madness. I'm like, you know what? They're missing the biggest show, and that's March Money Madness, because it's great that these basketball players are crushing it. They're making a lot of money, but let's learn how to make money today, because the last 2 weeks we've covered some really amazing stuff. Week number 1 of March Money Madness, we went over the foundation. We went over the fundamentals, like Michael Jordan stepping onto the court as per his coach when he got on the court, even when he was the best player in the world. What did he do? Went back to the basics, went back to the fundamentals, the dribbling, the footwork, just the basics. We did that week number 1. Then week number 2, we went into the sources of funds. We talked about HELOCs, home equity loans. We talked about first lien HELOCs and self-directed IRAs, because all of those things that we talked about week 1, week 2 bring you to this point. And quite simply, this point is where we all become the bank. You see, as per that video that I did, that was funny, that YouTube video I was playing, that was from 2022. Did you realize that was before Private Money Club was even available to the public? It was just like little side project, this little Pepe Le Pew, like Skunk Works kind of little project that we were doing and building, and you know, it was working, and we're like, whoa, this is cool. You know, we got our foundation set up, we got our private banking system set up, we got our sources of funds identified. Let's make money. And that's what we're going to do today. We are going to literally put the rubber to the road, and I've got the all-star team here, which we're going to get into announcing who's here. And here's the thing, though. I'm sure most of you know what PMC is. We know of it as Private Money Club. Does everybody on here know what Private Money Club is? But more specifically, who does not? Put no in the chat, because I think maybe I might have to just go back to some fundamentals. Okay, great. So Ron, even if it was just one, doesn't matter. We don't leave anyone behind. So Ron, and then we got Yvonne. We got a couple people who do not know what Private Money Club is. So what you would do, and just write this down, privatemoneyclub.com. Okay, that's the community. So here's what it is. Back a long time ago, I was in real estate, and I guess I'm still in real estate, but we were doing a lot of flips, and I used to borrow money from banks. Then banks stopped lending me money because banks just suck. Then after banks stopped lending money, I found hard money loans, but then they disappointed me because it was always one big lie after another. Hey, we're going to give you this much. Appraisal comes back. Then we're only giving you this much. Then something else happens. We're only giving you this much, and the fees and the fees and the fees. And I'm like, okay, this isn't a sustainable model. And then I met a person just like you. Okay. And I met several people just like you. I met teachers. I met engineers. I met business owners. I met people that ran like little just corner stores. And you know, the one unique thing about all those folks, they all had a little bit of money, but they all wanted to make more. And they wanted to do it with as little risk and the best return they could. And here's what I did. I started thinking about this, and I'm like, you know what? All these people that I borrowed money from for all the flips I was doing, every one of them, they're making anywhere between, back then it was 10 to about 15%. Okay, that was the range. Today, it's like 12's barely getting it done to 20. That's like what we're seeing. But let's just go with the 12%. They were making 12% on their money. But not only were they making 12%, their money was secured in a first lien position, like the ultimate security. Ask a bank, ask an insurance company. What is the most secured thing they can put their money in? It is a collateralized investment that they know, like, and understand. Specifically, real estate. Because real estate doesn't get up and drive away. Real estate doesn't run down the road. Real estate doesn't hide. It just stays where it is. And it's always going to be worth more in the future. And banks, insurance companies all know that. So when I was borrowing money from the banks, the hard money lenders, and the individuals just like you, the one thing they all loved was the return they got, but they got paid every single month. That's another thing they liked. Most of the lenders that lent me money, I had to make a monthly payment of sometimes interest only, or sometimes principal and interest back to them every month. So it provided cash flow for them. They were in a first lien position. They were secured. So they felt good because their money's it's there. And not only that, they felt part of the deal because they knew real estate. They understood it. They could see the deal. They could touch the deal. They could go spit on the property if they wanted to, for crying out loud. Then I got thinking about this and I'm like, you know what? I want to be the bank because I was just the borrower. And I remember after the pandemic, I sold off all my property. And then I started thinking this. I'm like, I got all this money and now how do I lend it? So I did what most of you would do is I started trying to find deals. What deals can I lend on? I went on Facebook, Instagram, all the social sites. I went to RIAs. And you know what? I found that to be a real pain in the butt, a real waste of time because everything I did just took a lot of effort and energy. And I kept saying to myself, you know, there's gotta be a better way. There's got to just be one place. I mean, for crying out loud, what was this? This would have been 2019. There's got to be one place where people that have money meet people that need money. I mean, that's got to exist, right? So I started looking and I found a bunch of places that I thought were that, but then all they were is lead generations for hard money lenders. You go in, you think you got, oh, this is a whole community full of private lenders to lend me money and full of borrowers that need money. And I'm looking at deals and I'm like, oh, I want to lend on this. All it was just a lead source. All I wanted, folks, was a dating site for money. Because I knew what dating sites were. You know, men, women go on a dating site. Why? Because they want to find a date. They want to go out to a dinner. They want to get married. They want to have kids. They want other things. But, you know, you get the drift. They went to a dating site because they needed a problem solved. And they found the traditional methods as difficult. Let's go to the bar. You sit at the bar all night long until 2 in the morning. Here in Buffalo, it's what do we open till now? 2 or 4. And that's a long night just to try to meet somebody to then have, you know, a date with. Uh-oh. Remind me tomorrow. I thought my computer was going to shut down. And then all the traditional sources of finding lending, difficult. Somebody somewhere was like, hey, this is easy. I'll just build a website, bring these 2 people together, let them communicate, not get in the middle of their deal, not say, hey, hold on a second. You got to pay me before you guys can go on the date. They're just like, listen, no. Just come on the site, get together, go have fun. I'll make money some way. Said, why isn't there a dating site for money? That is where privatemoneyclub.com stepped in. I drew the idea on a piece of paper with 2 boxes on each side. Just imagine a circle, 2 people on each side. Box over here, people with money. Box over here, people that need money. In the middle, education and community. Bring them together. Get out of the way. Don't try to charge money. Don't try to get in the middle of the deal. Just let people do what they know how to do, provide them the education, the knowledge, the coaching, the training to make sure that they don't make mistakes. Because for some of you, this is brand new. And for me, it was relatively new. I had to learn. That's Private Money Club. So that's what we're going to go into today. I got a whole panel here, and we're going to go one by one with different opportunities, different ways you can make your money go to work. Now, listen, who is today's training for? It's for 2 different people that accounts for every single one of you. Because I know for this, and you can all participate here, let's ask. Every one of you are one of 2 people. You either have money in your HELOC, equity in your house, in your self-directed IRAs or your 401ks or old retirement accounts, in your cash value life insurance, or just money in the bank. You've got money somewhere, okay? That's some of you. So if that's you, there we go. See Felix right there? He put have money, just put a $sign, okay? If that's you, if you're somebody that is the person who has money, put $sign. Great. Just watch a bunch of people come up. Now, let's do the other side. The other folks that are on this, because we're up to 169, so the other half are people that need money. They need money for an opportunity. They need money for a real estate deal. They want to buy an apartment complex, a commercial building. They want to do something. They need money. So if you're on that side, what I want you to write is need in the chat. There we go. Need. And then there are some rare ones on here who are both. If you're both, put both. What I have literally just done is identified every single one of you. But here's the thing. Every single one of you has a problem that can be solved right here, right now, because of what I just did. You now literally could look back through the chat. If you're someone that needs money, you could literally start writing everybody's name down that says, I have money. What did you just do? You literally just built a contact list of lenders, potential lenders that have money that want to make more. You could solve their problem. Why would you not solve their problem if they solve your problem? Because you have a problem too. You came here to need money. You need money for something, and they can solve your problem. So the people that have the dollar sign, they should start writing down all the names of the people that had the need there. Do you see what we did? We just played matchmaking. We just did what a dating site does every day. But now, what if we just made that way freaking easier with technology? You don't have to write anyone's name down. No, no, no. You don't have to try to find their name and look it up on social media and go to Instagram. Oh, they're there. Oh, wow, look at these photos. Hey, I saw you on Money Club Monday, or sorry, saw you on March Money Madness. You know, you want to hook up and talk about some deals. No, no, no. You don't have to do any of that anymore, because all you need to do is go to privatemoneyclub.com. Let me show you. You just go here. You just go to privatemoneyclub.com. And actually, I'm going to do something. We just launched brand new updates last night. So this is kind of perfect timing. Let me just show you something. I'm going to log out, and I'm going to try to log back in and see if this will do this the right way. Sign up today. All right, so what you're going to do is you're just going to go through. See, it's going to play games with me. It's going to ask you some things, blah blah blah. But you're going to basically sign up. So it's not going to let me do it the way I was hoping. So we're just going to go in. But you just like any social media site, you're going to put your name, your address. You can put your business address. That's preferred. You could even put your business name if that's who you're going to be borrowing or lending from. You can put a photo up. And here's a piece of advice on Facebook and Instagram. How many of you love friending and talking to people that have 0 photos up on their profile? Anyone? Not one of you. So on Private Money Club, why in the world would anyone go into Private Money Club and put a profile up with no photo like these folks right here? Not picking on them, just saying, okay, November 11, 2024, you forgot to put a photo. Notice how I haven't followed any of these people. Why? All right, 300 Breezy's got a cool photo. All right, I might want to get to know 300 Breezy. There we go. Look, Breezy, 300 Breezy's been a member since 2022. Can't believe I'm not friends with him yet. So these people have logos. That's perfectly fine. So whatever you're doing, you're going to go through here and you're going to say, all right, who do I want to find? Hey, maybe you just like people named Lisa. Maybe you're on here and you are really, really specific and you're just like, I just want somebody named Lisa. We're not going to go any further. There you go. There's all the Lisas. Pulls it up. All right, Lisa Queen. All right. Hey, what's up, Lisa Queen? Lisa Garcia. There we go. Lisa Shields. You just go through. How easy was that? You didn't have to write names down. You didn't have to look up contacts. Then if you want to go in, you just go into their profile. You can start following them. You can message them. You can learn about them, if they got deals up, so on and so forth. So there you go. One-stop shopping, dating at your fingertips. But then maybe you want to talk to the entire group. Well, you go in here and you say, what's up, group? You just post in anything. You put anything, properties, photos of yourself, just a community, okay? Maybe you want to get really specific and you want to go in and you want to look at groups like Facebook groups. All right, well, let's see. What is this bus tour group? I want to go on a bus tour. Maybe I'll join that group. You know, you just go down through, you find groups, or maybe you create a group. But that's reserved for Premier members. See, everything I just showed you up to that point, totally free. Didn't cost you anything. But then let's say you are one of the people that said, you need money. You go on here and you just post a deal. I want to put a deal up. Boom, you fill all this out. It just drives you straight right through it. Now your deal's up and it's going to look like this right here. So let's pick on this one, 85,000. There's your deal. Put photos up, tell them what they want, 85 grand, 14% interest, 12 months, first position. No, what are you thinking of that one? That sounds good right from the get-go.
It's worth a conversation.
I'd say so. Look at here, you know, Denard's he's got a photo, got a tie on. Look at this, you know, he's here for business, but look at this.
I like how he did that. Yeah, I like how he did the descriptions there. Yeah.
Yeah, it brings my eyes right to what I want to see. What is the current rent? Oh, wow, this thing's rented. Okay, what does it need? What's the condition? What's the exit strategy? That's what I want to hear. Oh, no. Seems like Denard's maybe talked to you a little bit or been to one of these trainings. I mean, look at that. He's already identifying the thing that the lender, is looking for. And every one of you that put a dollar sign, that's what you're looking for. You're like, all right, then I'll consider lending you money. I'd like to get 14%. I'll put it out for 12 months for my self-directed IRA. All right, you got some great information here. Look at it. There's his phone number. He's not hiding anything. Let's give him a call. But I want to know, like, how am I getting my money back? Well, right here. There's his exit strategy. Boom. Let's set up a call. So I might just say, all right, I'm going to follow him. And then I'm just going to say, hey, love your deal. Send me this, send me that, whatever you want. How much time did you spend here? We're just having fun. We're just blasting around the site. You go to the blog, you go to the learning, Here's the certification courses. You can go in here, you can go to the tools section. Hey, maybe you need a perfect loan proposal. Great, there it is. Spec sheet, max offer. You need to know how much to offer on a property, personal financial statement. All of that is right there. So you see, all we did is created a very robust dating site for money that solves a problem for every one of you on here, but not just everyone on here. Every single person has one of those two problems. And that's what we're going to get into today. We're going to literally become the bank. And Noah, please say it how you always do. How is it that we become the bank? What do we need to do?
Yeah, just like a bank, those 4 little words, right?
Love it.
Magic words, just like a bank.
We are going to do
We're gonna-
everything
Yeah, mortgage,
like a
trust,
bank.
promissory note, personal guarantee. We're gonna get listed on the insurance, just like a bank.
Love it. But before we're going to get into just like a bank, let's talk about like some of the deals and some of the opportunities that are out there. So I'm going to turn this over to start this off to Kevin Shortell. Kevin, just real quick, can you just kind of tell everybody a little bit about what you do? Now, you're an expert in note investing. Now, a lot of the folks on here probably don't have a clue what note investing is, but I love your slogan and your mantra: no tenants, no toilets, no termites. Tell everybody a little bit about note investing and how you play into Private Money Club.
Yeah, real estate without renters, is my book. And that's another way to look at it. Well, the other way to be a bank, so you can originate loans, and obviously you're being the bank there, as you just described and Noah just described. The other way to be the bank is to buy notes that somebody else already created. And it happens all the time. Sometimes note investors will start as real estate investors, and then they sell with seller financing, creating paper. And eventually they want to get cashed out of that paper. That's what I buy. So I become the bank after somebody does the loan origination. And there's a lot of different approaches to this business. I like the one that I just get to watch somebody else create it, somebody else originate it, do all that. I'll come around later on and purchase that up. And I've got a great example of that. I don't know how much time you want me to spend, but when I first came on, some of you may have noticed I blacked out my picture and I had my audio off. The reason is I am right in the middle of a deal, literally in the back of the screen here. And I'm super excited about it because at the last Money Tank event, I've got some clients that I'm working with on deals, and I'm happy to say every one of them has gotten into a deal except for one person. And I've been trying to find this really good note for this person. I've had a couple of deals that we've been looking at. And the idea, of course, is whether you're lending or you're buying notes, you want to be in a good deal, not just get in a deal for deal's sake. You want to be into a good, solid deal. And a couple of these were a little loose. I was like, no, don't like it. And there's this deal that I saw 2 weeks ago. And I was like, oh, this is it. This is it for them. And I get more excited today, by the way, about getting other people into deals than I do probably about my own deals. And so I was super excited for this deal, and it got away from me. Meaning that the next day somebody put a higher offer and the deal was gone, just like that. And I was a little bit bummed about it for them, not so much for me. And I was like, well, this morning I get the email, which I was expecting, it fell through with the other buyer. So the deal's back alive, and I'm able to get that deal put together. So I was literally scrambling and putting together a PowerPoint a couple hours ago just to show you the deal. So do you want me to show that? You want me to talk through? You want me to explain a little bit more? I don't know how much time.
Go ahead and share it. Just keep it super concise and fast, because then after that, what I want to do is I want to go back to the fundamentals that we did from day one and show how this would look with your particular deal, just using your own private bank. But yeah. Show a deal.
Excellent. Okay. I'll start by showing you the background of this. Here we go. So you can see literally what I just said. 13 days ago, I started looking at this deal. This is a live timeline as we're going through this. You can see my offer there coming in, and it came back today. So about 3 hours ago, I got notice, hey, this deal fell through, novice buyer, unable to close the deal. If you're still interested, let me know. So I was like, yep, you got it. Came back good on the deal about 3 hours ago. I requested some additional information, working on updating the information. This is an hour ago, 29 minutes ago, just requested more information 12 minutes ago, 11 minutes ago. So literally in the middle of a deal. And what I like about buying notes and lending money, so much of our work and effort can be done right online here. It's super simple. So to make it even easier to follow here, I'll just do a quick PowerPoint and and take you right through the deal. So again, performing note, I thought I missed out on this one, but they do have a way of coming back, and you can see it went pending, not from me, but from the other buyer here. So this note's a little bit different where I go back and look at it. This was a note that somebody originated on a property and the note went bad. And they corrected it by doing some kind of a loan modification. And then I'm coming in and buying it after it's been corrected. They've now proven their ability to pay again, but it's got a nice little kicker, as we say at the end. They took a $10,000 balance and said, we'll just put that to the end of the loan here. So I find this loan, I start going through all of the numbers here and see one of the advantages that I feel I have as a note buyer versus originating is when you're originating, especially if it's a new client, you are taking on some additional risk. You have to do due diligence and make sure that person's qualified and shows the ability to pay. Now, of course, once you have a relationship with people, and if you're at private money club and you start to lend with somebody and you're lending back and forth to them all the time, it gets easier and easier to do. But I get to go back and look at, well, how have they performed? Because these people have been in this property and in this loan since 2005. So there's a lot of history behind this. So I examine all of that. I look at the history. Again, these are the screenshots that I just showed you live. So I'll skip through those. But this is the property. So this is the collateral. We always look at whether, again, you're lending money or buying money that's already been lent. And again, what I mean by that is somebody created the note. I'm buying the note that they created. I'm cashing them out of that. This is the property, and you can tell from pictures, you get a lot of different opinions. You look at that picture and you go, hey, this is a well-maintained house. The neighborhood looks good. They're making regular payments. They ran into a rough patch in life years ago. That's all been corrected. I'm able to see that, look at all the documentation on everything. And what I noticed today, which was really cool, once I got the information this morning that this note was back and available for purchase because the initial sale fell through because the other person didn't know what they were doing. The one in red is the actual property. Okay. Today, when I was researching, I was making sure the property taxes were paid and all these sorts of things. It takes minutes online these days, by the way. I noticed that they had several other taxes that they were paying. Well, they own the lot right behind it. They bought that in 2002. So this is the house in red. They own the lot behind it, and they bought this other one next to it, which is also a vacant lot, in 2021. You read into signs like that and you go, these people aren't going anywhere. They're staying. They're invested in this area. This is a good quality note. There's a high likelihood that they're going to continue to stay and pay on this thing. So there's the lot. There's the back portion of it. There's actually two lots that they have back there. They've got the above ground pool, that sort of thing. So that's another positive sign on this note. But here's what a modification looks like, right? This is a loan, again, that started out good. The person faltered and they fell behind, and it was corrected. The lender went back in there. They worked with this person and they said, look, you owe us $42,000. So here's what we'll do. We'll mark that down to 32. We'll take this $10,000 and we'll put it at the back of the loan. You pay that when you pay off the loan. So in the meantime, we'll re-amortize it. We'll lower your payments, make it more affordable for you. Whoops. And now what have they done since? I got a full pay history going all the way back to 2019 or 18 on this one. And what have they done since? On time, on time, on time, on time. And I can go back and look at all of that history and just see when they're paying. This note is due on the 20th, by the way, not the 1st. That's why you see all these on the 20th.
So Kevin, they're sending checks for $230.49, and the investor invested how much money to buy this note?
So we're getting this note, and I'll show you the yield here. So I've got it for 23,000, but this was this is what their asking price was.
Okay.
So $23,000, and you're getting 200. Let's see what those payments are again here. Let me go back to the screenshot here. The payments
and also,
are
while Kevin's doing that, how many of you already on here right now are investing in notes? Put note in the chat. It's always good to hear from people already doing this, because Kevin, like when you go through this, a lot of numbers, a lot of different things, but let's also try to find some folks that are actually doing this, and then let's just talk to them a second. So we got Albert Kim doing it. But anyway, keep going. I want to bring somebody in. If any one of you posting note in there wants to kind of be picked on, just put pick on me in the chat, and we're gonna call on you in a second.
Yeah, so this note I got under contract today for, or getting under contract today for $23,000. So you're trading 23,000 bucks, you're getting back $245, okay, and 49 cents per month, and you're getting that for a total of 233 months. So that equates, by the way, to an 11%, 11.5% yield. But this one also has, remember that kicker, when they go to pay off the loan, there's an extra 10,000 bucks they have to pay. So if they were to sell the house or refinance it, I'm getting that 10, that 10 grand's for free. We have basically no money in that deal because we're already making over 11% just on the monthly payments on this thing. Now, if this pays off early, then our return's going to go much, much higher. It'll be 20, 30%.
And that happens all the time. And one thing I'd like to do is Corey over here said we can pick on him. So I don't know if you know Corey. If not, Kevin, Corey, Kevin. Let's kind of, Corey, how did you hear about notes? How are you doing notes? Are you working with Kevin? And just kind of give me just a quick synopsis, really quick, of your experience with notes, and let's see how you like it. A bunch of people, Kevin, were saying they want to learn how to do this, so we'll tell them how they could do that. But What's going on? There's Corey.
Hey guys, how we doing?
Hey, Corey.
Hey, man. Awesome.
So mine with notes is right now I buy notes into a group that basically helps business owners get their books in order to go back to the bank to get their loans. And it's through a promissory note. So we get 12 to 20% return on the money on that end. This is the first I've seen in this kind of dealing this with real estate. So this is kind of a little different angle, which I like. I mean, I'm in the real estate business too, but I'm getting out of the rental business. So this is kind of interesting for me to work through that end. So this is very interesting.
Well, I appreciate you coming on here. I know that's completely off topic, but yeah, Kevin, rock.
So Corey's doing business. There's notes everywhere. That's the thing what people don't realize. And so Corey's doing some business notes, when somebody sells a business, it's very popular to sell it with seller financing. That's a type of note. I focus on more real estate specific. So vacant land, single family home, commercial, anything like that. But Noah will tell you back in the day, because Noah knows my story from years ago. We used to buy lottery winnings. That's a type of note. We used to buy casino winnings. We used to buy professional athlete contracts. We used to buy cellular phone tower leases. I mean, all it is, when you're buying a note, you're buying an IOU that's backed by something of value. So if that value is royalties on a record or a professional athlete's contract, that's what it is. You have to know how to value that. In this space, our collateral is real estate. So all of you coming from real estate backgrounds and having some experience, understanding the collateral value is part one. And if my collateral value, like in this case, this property is worth, I don't know if I have the number on that. That's one thing I would normally do, but like I literally put these PowerPoints together about an hour ago, everybody, because I just got this deal back as I mentioned. Let me see if I've got.
You know what the fun part about that, Kevin,
is? The property value on this one. Think about this, the property value, which is a part one. What's the collateral? So what's our investment backed by? Our investment in this is backed by a $94,000 property, okay? $94,000. In fact, when I was looking at the taxes, it was tax assessed for 73. For those not familiar, tax assessment has nothing to do with fair market value. It's always way less. So a $95,000 property backs our $23,000 investment. So all of you, when you start to look at this business, like any other business, you look at your risk first. So when Corey's looking at business notes, he's assessing the value of the business and what it's worth, that sort of thing. I'm assessing what is this house in Brazil, Indiana worth that's well maintained and everything else. And the answer is it's worth 95,000 bucks. Okay. How much do they owe? They owe, you'll notice here, the unpaid balance is 28,000. But remember, this one has a $10,000 kicker that when they modified this loan, they said, okay, we're going to take the $10,000 that you're behind on, pop it to the end of the loan. You got to pay that off when you pay off the loan. So if they were to pay this loan off, in other words, if I buy this today and next month they pay it off, they owe $38,000. I paid $23,000 for it. Okay. So there's a big kicker on the back end of this loan. If they continue to pay, then we're getting $245 a month for 234 months. Just steady cash flow. They're set up, by the way, in that loan mod, I failed to point this out, but this is pretty cool. Very clever how they wrote this. Down here, this little arrow second to the last here, it says, therefore, subsequent payments of $245.49 will be drawn on or about the 12th of each month by way of ACH. So they made a condition on this loan modification that all the remaining payments have to be made by automatic withdrawal. Beautiful. It's automatic money coming in on this deal. They're debited every single month right of their account, and that's why you see the consistency of all those payments since this mod. This mod was done, by the way, in 2014. So the troubles they had are way in the past. And when you see that payment history now of going way up, fantastic. So again, I've really no risk in this deal, because what's the worst that happens? If they cannot pay for something, whatever reason, my investment's backed by a $95,000 property and I'm owed over $38,000. I'm fine. If this property was sold at auction, I'm probably not going to end up with a property. What I will end up with is being paid off. Not what I invested, but what I'm owed, which is a lot more than what I have invested. So that's all good. My return is good. It's safe, getting double-digit returns. And you know, a lot of these note deals now, this was the deal I specifically found for somebody in their price range here, but you can see a lot of these notes, you don't have to have $100,000. You don't have to have $200,000 to get started. You could get started with $23,000. Now, I believe in this case, the investor I got this note for, she's going to use, I believe, an IRA. So you can use IRAs, 401ks, all those sorts of things to invest in these as well. A lot of people, of course, use their life savings accounts, you know, on those to invest in these assets. So you're getting the appreciation, you know, that properties have. You got your safety, you got your discount. So my yield, yes, I'm making about, my investors making over 11%, but that yield could go substantially higher, because the other thing is, if it pays off, great, I'm in good shape. The other thing is, which is a little bit, would open up another door to a whole different topic. Once you own a note like this, just understand this. What do I really own? I own the next 233 payments of this loan. So at some point in time, could I turn around and say, you know what? I have an asset here, which is 200 and maybe 30 months go by. I have an asset here that entitles me to 203 payments of $245 per month. Maybe I want to raise some capital. You know what? Maybe I'll carve off the next 60 months and I'll sell that to Chris Naugle. And Chris pays me for those 60 payments. He makes a good return. I get lump sum. After Chris gets his 60th payment, I get the note back. I still got a long way to go. I still have about 140 some odd payments. And then I decide, hey, that was good. Maybe I'll sell another 5 years of payments to Noah. So Noah pays me. Noah makes a good return. I get a lump sum. I still get the note back with 100 payments. You know, so it's when you own these longer term notes, don't think of it as, well, that's good, but I'm locked in this thing for 240 months or 230. No, you're not. It's a liquid market, baby. And when I start selling off a partial, because yes, I did just say you can sell a note multiple times. Unlike real estate, you sell it, you sold it once, you're done. I could sell that part of that note, any part of that note. I just picked 60 months, by the way. But that's also going to increase my return substantially throughout this transaction to the point where it's infinite.
Corey, real quick, like how is this different than what you're doing, but is there similarities? Like, is this something you definitely would like to move into where there's real estate? Like, can you just talk a little bit about that?
It's quite a bit different. I mean, you're actually backed by the property itself and with the real estate, right? So it's actually safer than what we're doing on our end. I mean, we'd have to go and break down a business and sell the assets, right, to get our money back. So that's a lot more work than it is to just be able to have this here as a, basically, like say, a liquid product, right? Because you can turn around and sell it. Whereas the business, there's a lot of legalities and a lot of other stuff that goes into it when you get into that game. But yeah, it's very similar, but it's I would say safer.
Yeah, and plus remember too, just to add in there, but go ahead after that, Corey, I'm not a landlord either. I don't own the property. So don't call me with any problems with the property. You own the property. I'm the bank, you know, so I don't have any of that responsibility, hence the real estate without renters. And yeah, it's probably a lot more liquid market than what you're doing there, Corey, right?
Yep, absolutely.
Yeah.
I love it. Hey, and Corey, thanks for jumping on. I know it wasn't planned. I sort of just seen your comment in there. I just wanted to pop you up. Appreciate you sharing with us and being here with us today.
No problem.
Awesome. All right, Kevin, if anyone's interested in, working with you, learning more about how to work with you, like what would be the first step? Where would they go?
Yeah, let me, you know what? I should have had that ready. I'll pop it up in, oh, I got it right here. Let me pull that up. I'll actually put my link tree in the chat, everybody, and that'll have my social media, my email, all that sort of stuff is on there as well. And usually what I do is, and I'll put this up here as well. I realize sometimes you hear this for the first time and it's a little overwhelming. You're a little bit, what? I was kind of interested. Can you, what? Explain that again. And that's why I usually offer just, hey, with Chris's people, it's like, just let's set up a 30-minute phone call, and let's talk about it. You have an interest in it. Let's just set up a phone call with me directly and we'll just talk through it. And that way I can slow down with you and spend a little time explaining it personally to you if you need a little more help on that. But that's what I do. I just spend my day, working with people, finding deals, and I was really excited about this one today because I've been looking for a good deal for Debbie. So
I love it. I love it. Yeah. And I know you work with a lot of our community, a lot of the PMC communities doing stuff with you. I love that Corey, kind of came on and was able to just share his story. Totally different, but similar, but he's just like, wow, I like this, lower risk. So with that being said, Kevin, thanks so much. We're going to move on to the next topic,
Absolutely.
Which is what I'm going to do next, folks, is we're going to kind of go to Craig, and and after Craig, we're going to have Noah come on, and we're going to go over some fundamentals of just like a bank. And then we're going to finish up with Mike. Mike runs a bus tour for us. Now, back when I was flipping houses and doing that, we would always do bus tours. One of my favorite things I ever did when I was, doing that and doing the flips is we'd load a bus full of people, take them around to all of our properties and just show them, hey, here's what we're doing. Here's the mistakes we made. Here's the way you could do it. But Mike's got a really cool story, so we're going to finish with that. But I want to go to bringing this thing full circle. Okay, remember week 1 and week 2. And also, folks, I put it up in there, and so did Shauna. If any of you wanted to get the recordings of week 1 and week 2, I'll put the link up there, and Shauna will keep posting. And that basically gives you what we call the March Money Madness bundle. We've bundled all this together, the recordings of each one of these weeks. We've also layered in books, lots of different books. But most importantly, you get 12 months of access to Money School TV. We call it MSTV, been doing that since 2020. It's epic. We do all sorts of webinars on a weekly basis. Think of it as, instead of going to TV Guide to look for your favorite movie, you go to MSTV to learn about money. All different categories, all different things, everything from fundamentals, mindset, straight through. I mean, gosh, we even had somebody come on, morning rituals, but then we go into 401ks and retirement accounts. We talk about stocks and options. We talk about futures. There's everything you can think of that has to do with money, but the only thing you would go to is what you need right now, and that's all available on Money Club Monday's bundle offer. It's $197, normally $748. So if any of you are interested in grabbing that bundle, there's the link. But breaking news, this just in. Are you sick of having your money lying around not doing anything? Well, we've got the solution for you. PrivateMoneyClub.com. Back to you, Chris. Let's go on, and now Craig, I'm going to kind of have you come up and let's show everybody how to bring this full circle. So we want to become the bank. We set up our own private banking system. We can now make money twice on the same dollar, and I was going to have you show them how to do that. But before you get into it, I kind of get you right there, and then I'm like, stop.
All right.
Let me ask everybody here, just so I can engage the audience a little bit. When you're thinking about becoming a private lender or private borrower, a lot of people think, oh, I can't do that. I had a great Q&A question. Somebody asked me, should I go into PMC? I'm just getting started. I'm just doing this. I'm just getting ready to get my license. Like, maybe I should wait. A lot of people think they need to have this done and this done and this done and this done. And I need to do that. I need to do this before you go on there. Absolutely not. Like, I don't care if you're brand new, you don't even know what the word private money means. Get in the community. There's no cost. You can come in as a free member. Later, you'll probably want to upgrade to a premier member, because if you're getting serious about this and you want to get your deal done, premier members and certified members, the percentage of success with a premier versus a free member is tremendous. They're the ones getting the deals done. Don't believe me? Go on the site and check it out. But come on as a free member, start building relationships and making friends. But here's the thing. The people on Private Money Club, they're not private money experts. They're not Wall Street experts. They're not like bankers. They're me and you. They're not wizards or financial wizards. They are me and you. Let me actually exclude myself. They are every one of you. They're teachers, engineers, business owners, people that own gas stations. They're every single occupation you see on here. They're not the wealthy guy that's got hordes of money. It's just somebody that's got an old 401k that wants to do better than they are in the stock market. It's someone that's got some cash value in their life insurance. It's somebody that's got some extra money in their home equity line of credit. It's just us, folks. So Craig, bring that home. And I love it. I'm a meat and potatoes guy. Yes, it's meat and potato guys. And let's be correct, gals too, because gals like meat and potato. Me, I just like my veggies.
You like beans and rice.
Beans and rice. Rice and beans, beans and rice.
Yeah, so Chris, in the first session, we talked about infinite banking. We talked about using whole life policies to fund these types of deals, but we also talked about self-directed IRAs. We talked about HELOCs. So there's warehouses of money that you can deploy into a private lending deal that you can use to buy a note with Kevin Shortell. So there's all these different methodologies. But what we want to go through today is just show you, what does it look like when you build a warehouse of wealth inside of your infinite banking system. And then let's say we go out to Private Money Club and we find an opportunity. How does that money flow through our system? How does that work? So that's what we're going to walk through here real quickly here. All right, so we're going to run through a quick example, and we're not going to jump into the Private Money Club, but Chris already went through the Private Money Club. I just pulled one deal off of there. And so when Chris was walking through that, you saw there was a plethora of deals. And, we're seeing deals anywhere from 12, 15, 18. Kevin was just showing a note for around that 11 to 12 perspective. But at the end of the day, what we're talking about is with Private Money Club, Chris mentioned it's the dating site for money. So we're going to go out and find people looking for money if you're someone that has money. And we're going to get into, lending that money out. And we're going to use the whole life policy or our own banking system to do that. Now, that one deal you showed, Chris, I thought was really interesting because not only were you in first lien position, but that person also was offering a personal guarantee, which to me really bolsters the validity of what they're doing. Because look, if the deal itself doesn't carry the backing of protecting your money, then they're putting up their personal assets, which I think is really cool. And that's what I want to do with all the deals I'm working. I'm just going to jump over this one and get into a different slide here first. So in week one, we talked about infinite banking, and hopefully all of you were there. But one of the things that we do, within Chris's team is we help people build and design the infinite banking systems. And that's essentially using a specially designed whole life policy to be able to fund that and then use that money for these deals. So imagine, if you will, you had $100,000 as a one-time dump in, and you wanted to build a policy with a $12,000 annual premium. What I'm going to show you is what that policy looks like if you just simply funded the policy and did nothing. And then we're just going to show you a few years of snapshot of using that same money in the policy to do a private lending deal. Now, this could have been done with a self-directed IRA. That's a different set of math. But what we're going to do is just kind of walk through what that looks like. So what I'm giving you here is all the ingredients that we put into the policy design. We're not going to get into all that today, but there's a lot of ingredients. Just like when I make a cake, I have to have so many eggs and so much flour and so much sugar. And when you come to us, we know all the ingredients it takes to build a really good whole life policy that can be used for infinite banking. So these are the pieces and parts that we put into it. So with that said, when you get your policy, we will design something like this for you where, at each year, you're going to be able to see how much did you put into the system. So in this case, it's $112,000 going in because we did that initial $100,000 dump, and we're doing a $12,000 annual premium. And so what's really powerful with these policies is that you not only have guarantees, and these guarantees are applicable if the insurance company never pays a dividend. And Chris, can you remind me of all the companies you work with? How many times have they missed a dividend payment?
Never once. Not in well over 100 years. Not even during the Great Depression.
Yeah. Bank holiday in 1933. I love looking at the history of that because banks were failing, getting shut down. And here's these big mutual companies still paying dividends. So it's nice to have the guarantees, but there's never been a time in history that they didn't pay these dividends. And so everything in this lighter blue color is really relevant of the guarantees plus the dividends. And so really what we're showing you is that with this strategy, you're going to put in 112,000, you'll have 103 available in cash value. So that means we have about 92% of our cash available within the first year. Not a bad business to get started with if we have 92% profits within the first year. But it's really important to understand there's a little bit of give and take in this where it takes some time to get this whole system efficient. And we're going to show you what it looks like year 1, year 3, and year 10. But what can we do with this 103,000? What can we do every year when we make more and more money? Well, we just looked at Private Money Club. We could put those into deals where we're making 12 to 15% on this money. We could work with Kevin and he could show us how to buy notes where we can put this money into a note and make more and more money. So what you're seeing here is this is the policy and this is how it grows regardless of whether you're using this money or not. So this would be representative of, hey, I'm going to fund the policy, put it on a shelf, and I'm not going to do anything else with it. But what we teach is let's take that money and let's put it to work. And we do work with a lot of folks too. I don't know if there's folks on today that have debts, that have major purchases they have coming up. Well, we can structure a program for you to do the same thing where we pay your debts off. And then when the debts are gone, we take that cash value, put it to work. So there's a lot of cool things we can do with these strategies. So I'm not going to go into all the details of how the policies are constructed and working, but I just wanted you to know we're putting money into the policy. There's some subset of it available within the first year. By year 2, we're putting in 12,000, as you can see, and we have over 12,000 to use in growth. We have over 13,000. So we have more than $1 coming back to us in the policy that we can then go deploy. Now, with all of that said, I'm just going to walk through this slowly. And the assumptions I'm using right now is we're taking that policy, we're funding it, and we're going to be putting it into a 12% investment. Okay, so let's just say we found a really cool deal on Private Money Club, or we found a note that we want to buy, and we're planning on making 12% a year on that money. So here's what happens. Year 1, we dump in the 100,000, and we also put 12,000 of premium in. So what this means is we're going to have about 90, let's just call it 93,000 available to use within the first 30 days. So what we're going to do is take that policy loan from the policy. We're going to put it into what we call a segregated account. And the reason we're doing this is we want to keep this money separate from all of our operational expenses, our grocery money, buying groceries and gas and whatever it might be. So what we're essentially doing is just saying we have 93,000 that we want to put into this first deal that we found in Private Money Club. Now, this is going to most likely be kicking off about 1% a month because if it's 12% yearly, about every month we're going to get 1% of that. But over the course of the year, we're going to earn about 11,165 on that 93,000. What are we going to do with this 11,165? Well, it really depends on where you are in your cycle of the money flow. It could be used for retirement money. It could be just put all back into the policy. Some of it could be used for reinvesting. So in this model, what I'm going to show you is taking this 11,165, we're going to carve off just enough to go back to pay loan interest into the policy. We're going to take this 6513 and we're going to add it to the investment going into year 2. So we're reinvesting this. And so what you'll see is there's going to be a set of money that just kind of gets stuck in this loop and keeps building and growing and building and growing. And guess what's happening inside of the policy? The full amount that you put in there is growing and growing and growing. And so we've really got money working in 2 different places here. And we've got death benefit. So there's a lot of benefits to this strategy. All right, what's it look like at the end of year 1? Well, we've put in 112,000. We have 109,000 of net benefit. What do I mean by that? Well, we have 93,000 in a deal. We have 11,000 of gains that year. Plus we have a remnant of cash value still sitting in our policy. So that's what the 109 adds up to. We've got a $1.7 million death benefit. God forbid anything happens to us at this point. We put 112,000 in this policy. Our family walks away with 1.7 million. And so at the end of the day, what we're looking at is a cumulative return of, we're on the negative side of about 1.89. And what we teach here is that, you know, stick with it. It's a long-term game. You're going to keep doing this over and over for, say, 5 years, 10 years, 15 years. So I'm going to keep going, and I'm going to look at year two. What does year two look like? Well, we put in the 12,000. We're no longer doing the dump in, so we're adding 12,000. Our loan balance is now up 105,000 because we're now pulling out 11,991. We're going to add that with the gains from last year. So remember, last year we earned about 65.13 after paying loan interest. So we're going to add that to our capital and put it to work. So now we've got over 111,000 out working in our private money club deal. These could be multiple deals, could be one deal, could be two deals. It just think of it as an aggregate. That's how much is out working now at 12%. So what we're going to do is take that 13,000. We're going to keep 81.33 to reinvest, and we're going to pay a loan interest of 52.51. Now, something magical happened in year two because we've now got 124,000 injected into our system. Net benefit of 131. We still have a death benefit of in the 1.7 million and a cumulative return of 5.92. So now we're starting to see that this is gaining some traction, right? So what's it look like at year three? Well, we put the 12,000 in, our loan balance goes up, but look at this. I put in 12,000 and I'm now taking out 12,686. That's pretty cool. And why is that happening is because of the uninterrupted compounding interest that's going on inside of the policy. We're now at that point where the policy is efficient, meaning for every dollar we put in this, going forward, we're always going to get more back. So now we add that with our gains from the previous year, throw that into another deal or keep adding to the deal that we're in. We take 15,833 of gains, 5,866 goes to loan interest, and now we have almost 10,000 that we're going to add in to the following year. So now we're at a 14.29% cumulative average. So do you see what's happening here? We're earning money over in the private money club, but the policy is becoming more and more efficient, which is going to allow us to get more and more out, which allows us to keep adding more and more to our deals. So let's jump to year 10, and then we'll kind of wrap this up because I think everyone's kind of catching on to the deal here. Because of different IRS rules and the way these policies work, I'm now at a point where I can't continue to put in the full 12,000, but I can put in around 10,000. Our loan balance is up to 230. I put in 10,000, I'm pulling out 18,000. Who thinks that's a pretty good banking system if I'm putting in 10,000 and getting out 18,000?
Ooh, sign me up.
Chris, you'll do that? You'll do that all day long?
But I can't be the only one. Who on here wants to deposit 10,803 and take out 18,000? Come on, everybody sleeping here? Some people are like, oh, that sounds too good to be true. All right, now everybody's waking up. Now they're getting, wait a second, 10,000 in and 18,000 out, 10 in, 18 out. Oh, yeah. All right.
Well, let's just run around the circle because I want to show, and I've got a lot of clients I work with say, hey, what if I don't want to keep circling the money at year 10? Well, guess what we can do? We have a lot of options. We have 372,000 out there working. You can just keep that working and every year keep generating 44,000, and this 33 could become retirement income. It could be something that you don't reinvest or you don't put in the policy. Or if you don't need it, you can put it into the policy. So there's so many options that you have at this point. But 33,160, say to $33,000 every year is, pretty nice chunk of change to add to your, to supplement your retirement income. But really what this looks like at the end of the year 10 is we put in 216. We have a net benefit of 430. So cumulatively, we've got about 99% cumulative return. Our death benefit did drop because we no longer need the term insurance in there to keep the IRS satisfied. That's for another discussion, but we can talk about that in policy design. But who here thinks putting in 216 and getting 430 back and having, your money working in the policy, regardless of whether you're working and having private money club, is this something that you'd want to do? Because that's what we do. That's what Chris does. That's what I do. That's what a lot of people on our team do, is we just keep running this money through the circle over and over and over.
And Craig, we do a terrible job I'm going to call it out. We do an absolutely terrible job of talking about one of the, I think, most valuable things with everything you just said. Everybody's hyper-focused right now, putting 10 in, taking out 18, the cumulative return. And I did say cumulative, not cash on cash, because we do different returns. I got a YouTube video that we're putting out, cumulative versus cash on cash, the differences, but 99% cumulative return on this one. But the other thing too, and I'm probably the worst at this, is you protected your family while doing this, while helping build wealth for yourself, for your family, providing a better life for everybody that you come in contact with. But you also made sure that if something goes wrong and you get hit by a bus, there's a death benefit of $386,687 that's paid out tax-free to your family. I can't let that go anymore, because that is such a valuable thing. And I know this because I've delivered so many death benefits to widows with young children who lost their husband unexpectedly, passed away, didn't know how she was going to handle it, gets the check. And that is the ultimate way of saying, I love you and I didn't want to ever leave you in a worse place, even though I'm gone. Like, imagine if people could speak from the grave, what would be said? That death benefit matters, folks. Everything else here is great. I'm not trying to get your focus changed. Oh, we're going to buy a death benefit. Because listen, you made 99.15% cumulative in what you were doing here with lending, but you also protected your family with a death benefit. And that is worth mentioning. The other thing, Craig, I want to call this out. Warren is on here, had a great question. Warren said, this sounds a bit different from how we are supposed to pay the loan plus interest back into the policy. Here you are saying just pay the loan interest back to the policy so we can reinvest the rest. How can we tell if we should pay it back or pay it back principal and interest, or just pay back interest? This is a phenomenal question. And sometimes when we train, Craig, or anybody on this team, we show one example, but there is no one right way to do this. The only reason we showed it this way, and Craig, I want you to put your 2 cents in, Warren, is because we're assuming in this that every year you're relending the money. So you're going in PMC and you're constantly moving the money. I'll be the first to say, I don't do it this way. Like right now, I have a lot of money sitting in my policies. And I know that's like a swear word. People are like, oh, you have what? You have cash in your policy that you haven't loaned out? Yeah, I have a lot, because I know what's about to happen. You see, I know what's coming and I know the opportunities that brings, and I know I'm going to need cash for that. So I'm letting go of some short-term FOMO gains to really be ready for the long-term gains. But here's the other thing, Warren. I do a ton of lending to myself for cars. Like, I collect cars, and these cars in here, I have funded every single one of these with loans from my policy. Now, Warren, to what you're saying, when I repay my policies back for the cars, I repay principal and interest. I run an amortization schedule on bankrate.com, and I pay my policy back, principal and interest. I don't just pay interest back to my policy. I have done loans where I've done loans to my company many years ago to cover Shauna's paycheck because she was going to quit, because she was like, hey, I looked at the bank account. There's no money to pay me. Like, what do you want me to do? Look for another job? I'm like, hang on, calm your little butt down. I went to my policy, took a loan, deposited it into the company, and all the company paid me back was interest. And then all I did is I just paid just the interest on that policy loan until my company had more money, and then I paid the loan off. So, Warren, what I'm trying to say is there's so many different ways to structure this. I don't want you to think there's only one way like what we showed. Your way of thinking is probably the right way for what you're doing. But again, just don't ever just cap yourself to only the one way. Craig, anything to say on that?
Yeah, there's a couple things. I'm just going to take a quick step back, and because there was a question I think Mick had, and I just wanted to elaborate on the death benefit conversation you had. Absolutely important. But if this was my policy and this was my situation and I died, my family's getting the 386, plus I left them 372 in an investment that's kicking off 44,000 a year. So they're walking away with the 386, which is tax-free. There may be some taxable issues here, but they're getting this plus this, right? So they're going to get the death benefit plus whatever capital. I mean, this investment's still going to the family. And to your point exactly, Chris, this is just showing a constant reinvestment, but you could be taking all of those gains and putting it all back into the policy to buy down the loan and just have some ready cash there. One of the things I personally do is I do something called free the capital. So for example, I may have some money out here working and I'll release, as this gets built back up in my policy, I may release 50,000 or 100,000, and then I'll use all this to clear it back out. And so I'm constantly deploying, getting it paid back, and then deploying again, getting it paid back. And it moves a little slower, but I do that because I want to have some ready cash here, and I just don't want to be fully leveraged. So when you're thinking about how do we do these strategies, we've got some people on our team that won't leave a dollar laying around in their cash value or their HELOCs or anything, and they just keep it working, keep it working. The way I operate is I can't sleep at night if I fully leverage myself. So I've got money in my HELOC, I've got money in my policies, and I deploy chunks and then get all those loans paid back off, and then deploy chunks and get it paid back off. But any way you want to run it, you can run it. You can go fully leveraged, you can pay interest only, you can run it all back in your policy, and we can help show all of that. So it really depends on what you're trying to accomplish.
So folks, we're going to move to the next topic. We're going to bring in the master of disaster, the just like a bank man, Mr. Noah, the greatest, in my opinion, private lending coach there is. But before we do that, Craig, can you just put your email up there? If any of you, or your link to book a call, if any of you have interest in discussing what Craig just showed, the private banking system, the infinite banking concept, and the specially designed whole life. We covered all that in week 1, but I don't want to leave anybody behind. I know a bunch of people just joined. Are there costs to run that program? You'll never pay us. You'll never write a check to Money School, and none of my companies. We get paid by the insurance company. We get paid a commission. The commissions, with the way we design them, are 60 to 90% less than a normal whole life insurance commission. But there are fees, which are cost of insurance for that death benefit, policy service fee, and the commission. We are very transparent. So when you book a call, we'll walk through those. But those examples, those numbers you just saw were net of all fees. So every number you just saw, folks, there's nothing on top of that. That's net of the cost of insurance, net of the commission, net of the policy service fee, which is $50 for that company. So just wanted to be clear about that. Your questions are coming in. I'm trying to keep this thing moving because we got 2 more and it's going to get really good, really fast. Not that Craig and Kevin weren't good, but we're just kind of rolling this through. So now, what I'd love to do is get real technical and let Noah take over and now show you how to be the bank, but how not to make the mistakes that would put you in harm's way. There is risk with doing private lending. So if you're going to lend money on Private Money Club, you have to know how to mitigate those risks, how to be the bank just like a bank, and how not to make mistakes that could potentially cost you money or lose you money. And there is great ways that Noah teaches how to do that. Noah, I'm going to turn it over to you.
All right. Thanks, Chris. Oh, man, so many hot takes this morning. I'm like frantically taking notes and writing things down. That's why I just love being on these calls, because like Shauna said in the chat earlier, I'm always learning something. I'm a huge fan of everything you guys are talking about. I have 4, actually 5 now. I just took over my mother's policy. And I'm a big believer in what Craig's talking about, what you guys are doing. I don't think that there is ever a right time to delay, whether it's getting education, whether it's getting an appointment with Kevin or Craig. You know, my youngest son is autistic. He's 8 years old. And when he was probably, like maybe 6 months old, we got him his own IBC policy and started funding that for him. And, you know, if we had waited, I don't know if he would have been able to get one based off of his disability, right? So you never want to delay or wait. You always want to take action. You're never going to have too much education. And when you surround yourself with the right team and the right coaches and people like this, they can help you get the ducks in the row, but you got to take action, right, Chris? So yeah, I like Chris said, I'm a coach for Private Money Club. I coach what's called the Accelerator program. I also do a weekly webinar every Thursday at 1 o'clock Eastern time on the fundamentals and best practices for private money lenders. And really, we try to fit as much in as we possibly can. But man, it is a beautiful thing to be able to make double-digit rate of return and have it secured by real estate. Let me ask you a question. I get the chat going here. Get ready, get your fingers warmed up, or your thumbs if you're on your phones. How many of you love the idea of making a double-digit rate of return and having it secured by real estate? If done properly, real estate that's worth more than your loan amount. Let's see it in the chat box there. You love the idea of making a nice double-digit rate of return and having it secured by real estate. All right, cool. Love it. Love it. It's all coming in. Yes, yes, indeed. Love it. Love it. Love it. So in my world, I would call each and every one of you a lender. And when I'm out in the public, when I'm out meeting people, family, friends, coworkers, neighbors, I always ask people, hey, what do you do for a living? This, that, and the other. And in my mind, anyone and everyone should be interested in private money lending. I'm a true believer that if when done right, man, what better way is there to make a nice double-digit rate of return and having it secured by real estate? I love what Kevin was talking about. I'm a huge Kevin Shortell fan. What I love about what Kevin does is he takes notes that are already performing. The paperwork's done, the tenant's in place, there's history of cash flow. But gosh, a big difference between what the gentleman who volunteered and hopped on that was buying notes was doing and what Kevin was doing, unsecured versus secured, right? Huge difference. By the way, if it wasn't for Kevin Shortell, I wouldn't be here right now. Kevin Shortell introduced my wife to real estate investing almost 20 years ago. I was hoping he would stay on the call, Chris, because I have a Kevin Shortell action card here. I don't know.
Hey, what is it signed?
It's not signed. It's definitely not the rookie card. It is more recent here. And I was hoping to get Stephen Nagy on here too, because I got a Stephen Nagy action card as well.
Oh wait, those are going to be worth some money, man.
I sure hope so. I sure hope so. But I'm a big believer in what he was teaching. But what Kevin was talking about, he kept using the word secured by real estate. The word secured by real estate, right? So that's what I like to really drive home to my lenders and students and people who are in Private Money Club. But I feel like I'm all over the place here because I'm learning so much from you guys. I'll dial it in here. So prior to asking to be a coach for PMC, Chris and Stephen more so came to me and said, hey, would you want to do a coaching program for Private Money Club and things like this? And I said, you know what, I'm unsure. I'm a big believer that if I'm going to teach something, represent something, that it has to work. And it is what you guys are telling me. So about 2 years ago, I joined Private Money Club. I hopped in Private Money Club and I set out to see what it was about. I'm a real estate investor, first and foremost. So I'm a house flipper. This is what I do for a living. My wife and I, we renovate 10 to 15 houses a year. We buy rental properties, Airbnbs, wholesale deals. Real estate is how we pay the bills, right? So this is what I do. And I wanted to make sure, hey, Private Money Club, is there actually people in there that are looking to lend their funds? And can someone like me, a real estate investor, be successful using this platform? And so I just asked a few minutes ago, how many of you are lenders? Let me ask a question. Is there anyone on the call right now who is an active real estate investor and you would love to use people as opposed to hard money lenders or having to dip into and use your own cash to fund your real estate deals? Do I have any real estate investors on the call right now? All right. Amy says, absolutely. Darren says, yep. All right, cool. I imagine there's 180 plus people on here. I imagine we're going to have quite a few as well, right? So newbie Jim, awesome. Love it. Alicia, absolutely cool. So I would consider you borrowers. Now, I don't know if any of you have deals that you need funded right now, but I'm just going to share with you 4 easy steps, things that I did when I first wanted to test out this platform to see if it was what they said it was and to see the kind of results that I would get. Now, these are my results, right? I can't guarantee everything's going to be the same for you. I promise you it would be different. Maybe you'll make more relationships. Maybe it's all about how you leverage the platform. But in right around 30 days, I had 2 dozen conversations with people, give or take, in Private Money Club. And I was able to account for a little over $2 million of people who wanted to put their money to work in my real estate investing deals. I documented it all. And I created these different case studies. So if you're on the call right now, I'm going to give you some advice and then I'll get into some real fundamentals, like what do you need to know to be just like a bank, right? Just like a bank. So I'm always cruising in Private Money Club. I'm always checking things out, always looking at the deals. Maybe if we have time, I'll share some tips on how to have your deals and things like this stand out. And as a lender, how to have it stand out. But essentially, private money lending, the idea is great. Where can someone put their money to work? The hard part for a private money lender is knowing where to go, right? We love the idea. Noah, this sounds fantastic, but where are these deals? Who are these people? They're in Private Money Club. right? From the borrower's perspective, no, I love the idea of using a person, but who's going to lend to, where are these people? Like outside of private money club, when I'm go to like talk to my friends or fellow real estate investor, associate network, friends and things like that, they think I'm crazy. Like they call me the private money guy. I'm like, private money, we're not like a group of Sasquatches. Like we really exist. Okay. Like, but if you're not fishing in the right pond, if you're not around the right campfire, like you guys always say, you're not going to be able to find private money lenders. But here, this is where we hang out. Right. So it makes life so easy. Right. So let me pull up a slide here and we can kind of go through. This is what I would do. Okay. This is what I would do. And this is what I did. If you're on this call right now and you're a borrower, here's the steps. Chris already kind of went through this. Join the private money club. There's a free option. You can poke your head around. I think you can post one deal in private money club with a free membership, right? So you can kind of see what it's all about, see what kind of traction you get. But if you do create a free profile in private money club, like you said, don't half-ass it, right? We got to use our whole ass, as my sister says. Mike knows Maddie, but we can't have we got to go all in. So you want to have your picture in there. You want to create your profile just like that young man did, have details about who you are, what your business model is. That's number one. This is simple. So everyone on this call, I think there's like 180 people. I'm a big believer that everyone on this call at the end should have a private money club profile, whether it's a free one or a paid membership. Now, if you are a premier member in Private Money Club, what the beautiful thing about it is you get to present your deals. And that's what I did every Monday during that time frame. I hopped on webinars. I was a participant. I was active in the community. I was doing my best to meet people. But if I have a deal that needs funding, I can present it via Zoom to the community every Monday at 1:00 Eastern time with Steven on Money Club Monday. That's a no-brainer. I don't know any other platform out there that allows a person to do that.
I can tell you right now, Money Club Monday, I'll just give you a couple examples. There's one investor who came on, he was brand spanking new to Private Money Club, had a deal, didn't know how to get it funded, came on there, was a premier member, went on Private or Money Club Monday. I think he came on 3 times, raised over $2 million for his deal in San Diego, which he is now under development with. That's one. There's another developer who's been on Money Club Monday many times. He's been part of PMC for a while. $84 million is about where he's at right now for what he's raised for his development projects. And then there's been a whole bunch of people that have come on there with smaller deals, 85 grand, 100 grand. They get funded because this is a platform you come on to and you can post and pitch your deal to the entire audience. It works, doesn't it? No, it's phenomenal. I think you've raised money on Money Club Monday.
I'm a case study. That's all I'm doing right here is talking about things that I do and that I've done. I'm not saying this isn't theory. I'm just saying this works. And there's a lot of people from my network in my hometown who are kind of catching on to this and now in Private Money Club. So yeah, it's phenomenal. And then if you have a deal, post the deal, right? So get your profile up, schedule an opportunity to speak in front of the group with your deals, post your deal. So it's in Private Money Club, of course. And then, like I said earlier, it's okay, take action and then get your ducks in a row. I think the biggest thing that held me back with real estate investing and really like talking to private money lenders in general, when I was first getting going, I felt like everything had to be perfect. And, if I just do this before I do that. And all I was doing was creating these delays in my life for the success that I was, destined to have if I just got off my butt. Right. Sometimes a good coach will do that. So the Private Money Club has something called the Blueprint Call, where you can schedule a call with a team member. And if you need help with any of these things, they can show you, they can direct you, they can guide you like a good coach can, right? But those are the 4 things that I would do if I had a deal that needed funding right now. And if you flipped it, Chris, if you were on this call and you were a lender, it's the same steps. I would create my profile, make it stand out, make it worthwhile, make it look credible, right? These are things that, we can help you with. I would hop on Money Club Monday to look at active deals, kind of set your reminder every Monday, or they do replays where you can hop on afterwards. Or if you want, I would check the deals on a weekly basis to see which ones are up, see which ones are new, things like this. And I would also schedule a call with the team to make sure that I'm navigating through the site and putting my best foot forward, right? So those are some bits of advice that I would give to anyone that's like, man, I fall into that category of wanting to put my money to work. But here's the thing, if you don't know what documents you need, if you don't know what to look for, because essentially you're underwriting your own deal, if you don't know what questions to ask about the borrower and to find out a little bit more about them, these are things that we can also help you with, right? And so, and we really want to help you with these things too. Like, just because a deal is posted on PMC, or just because, you made friends with someone on a Zoom call that you haven't even met or had a phone call with, that doesn't mean you're going to do a deal with them. But when Chris pulled up a deal earlier and he said, hey, Noah, what do you think about this deal? What did I say? I said, well, it's definitely worth a conversation. Let's pick up the phone. Let's learn more about this person and about their business and about their properties and their track record, and find out a little bit about them and learn more about this deal, right? But this is a platform where you can meet great people and great opportunities potentially, right? One of the things that I'm helping people that take my classes through PMC is putting together proper presentations. So when you hop on Money Club Monday, like, let's make sure that, if you're going to be asking someone, hey, I've got a great fix and flip deal, I've got a great rental property. All right, great. How are you going to prove it? How are you presenting this opportunity where people are lined up to work with you? Anytime that I've posted a deal on Private Money Club, I've had multiple people wanting to fund my deals. Good people, good lenders. It's hard to pick sometimes, right? And so I believe that a big part of that is because of how I present the deals and the things that I ask for and put together when before I even start having the conversations, right? So here's some of the things, we talk about from a lender's perspective. Like this slide right here, if we go back, this might be, how to put together a good deal. This right here, these are really important things that I would want to know as a lender. These are things that I would want as a lender, right? So everyone loves the idea of making 15%, 20%, 12% interest, having it secured by real estate, this, that, and the other. But we got to make sure that we're doing things the right way, right? And so when I say things like just like the bank, what I mean is, think about this, guys. If you're on the call right now and you bought a house, maybe it's the home that you live in. Now, if you got a mortgage, or if you went to the bank, you borrowed money to make that purchase, there's probably a big thick stack of documents that you had to sign at closing, right? And then the bank wired the money once all those documents were signed, right? You probably had a mortgage or deed of trust, depending on what state you were in. You signed a contract called a promissory note that outlines the terms of the loan. You personal guarantees, even hard money lenders, personal guarantee. You're saying, hey, look, like, this is really important too. I see sometimes people don't offer personal guarantees. I always do. I don't know. Mike, do you offer a personal guarantee in your business? Mike Puglisi, thumbs up.
Yeah, on every deal.
I'm a big believer, you guys, and I don't know about you, but if I'm talking to someone and they're looking at their retirement, they're looking at their Roth IRA, and they've got, $500,000 in there, and they're thinking about lending 200 of it to me to fund a real estate deal, I have no problem putting my personal name on the line and my personal assets on the line for that, right? That's how we do business. So I think that's important. I also want to make sure that I'm providing my lenders with a lender's title insurance policy. I'm giving them copies of the settlement statements at closing so they can see their information listed there. Everything's laid out for them. And it's really important too to understand, are you in a first position? Are you in a second position? If you are in a second position, are you okay with that? Right. And then after the fact, one of the things that I think a lot of people don't really talk about that much is, are we making sure that that mortgage is getting recorded, right? Or is it just going in a desk drawer somewhere? Okay. So I've seen hundreds, if not thousands of deals over the last 10 or 12 years of being in the coaching space. The deals that go great and build long-lasting relationships have all of these things. And the deals that don't go great, if there's ever an issue, I'll ask them, hey, did you have a mortgage? Did you have a promissory note? Did you get a personal guarantee? Did they do a title insurance policy? Did they give you a copy of the settlement statement? Did you follow up to make sure that things were recorded? Usually they may have done one or two of those things, right? So when we say just like a bank isn't going to do it, it isn't going to not have these things. So if we're acting like a bank and we're the lender, it's really important. Why would we not do what the banks do, right? They've got the proven track record. All we got to do is just copy and paste, right? So there's a huge opportunity here, you guys. The platform's fantastic. But if you feel like you need help, you need support, Private Money Club offers these things. And my advice to you is, create the profile, get in the group, get on the platform, put your best foot forward, and the ducks will sort themselves out. You've got a great team here to help you and assist you along the way. Let's make sure that we're just getting in the building, and then we can figure out which direction we want to go.
Man, that was good. Awesome, awesome job, Noah. And also too, Mike, I also personally guarantee my deals. When I'm borrowing money, I always personally guaranteed and I always provided a personal financial statement to my lenders because I wanted them to feel so confident in myself that I was willing to say, hey, listen, if I mess this up, Mr. Lender, here are my assets. I'm going to guarantee your money with my assets and with the deal. So they felt really comfortable. And I'm going to go one step further. No, one other thing I did with all lenders, and folks, if any of you are borrowers, this is a really good tip. Every lender, what I would do for each property is I would create a new bank account and I would give that lender view access to see that account. And I would tell them your money is going to be segregated in this bank account so that it doesn't commingle with the rest of our operations. Your money for this deal that you're lending on is right here. You can log in anytime and see it. You can't take money. You can put more money in if you want, but you got to call me first. But that's how I always did it, just to give them the ultimate confidence that I was going to do good by them and fulfill on my obligation as a borrower to repay them, not just with interest, but interest and their money back. So
I love that. That's such a good idea.
All right. Well, let's move on. We got Mike Puglisi. We call him Pugs here. Mike has come into our universe and our world and just rocked it. Like, there's so many people that we come across that they want to get into real estate, but like maybe they're a doctor, maybe they're a dentist, maybe they're just super busy in what they do. They don't have time to go out, identify a property, work with the realtors, do all that, then flip the property, renovate it. They're like, screw that. I just want to buy a property that's already done, that's cash flowing, that somebody else is managing. Just send me the check every month. I'll fund the deal. That is what Mike does. And I'm going to tell you, and Noah would say the same thing, and Craig would say the same thing, and a whole bunch of you on here that already work with Mike, you would all say there's no one better at this game than them. And they're also the ones that run the bus tour. So Mike, take it from there.
Well, I'm just going to end right there, Chris. Thank you so much.
You're welcome. Thanks for joining us.
Yes. No, I mean, listen, the thing about the Private Money Club, it's such a great community. The relationships built here are lifelong, for sure. Noah is what got me started on this about 8 years ago. And he's like, are you borrowing private money? I'm like, no. He's like, you need to do this. You need to do this. You need to. And for about 2 years, he kind of nagged me about it and would send me his little presentation he was doing and how he was borrowing money to scale up his business. And he finally got me involved, and it has definitely helped out. And then the best part is helping other people out and getting started in real estate, not just on, the flipping side, but buying a turnkey rental or becoming a better lender. I think the last bus tour, we had all lenders in there, which is great, but a lot of them just really, Chris, they wanted to learn about underwriting. What does a repair budget actually look like? What do things actually cost? And then how do you hire a contractor? And I tell you what, our lenders, that come to this, they really want to lend their money out. They just want to make sure they're safe. And of course, if you haven't taken Noah's course, that's the first thing you should do. Take Noah's course, understand how to lend out your money and understand how to borrow your money. Because if you look like a good borrower, lenders will lend money to you. And that's been really what's gone on these bus tours, is that we've had a lot of lenders come. They just want to learn the underwriting process. And then walking live projects. I'm actually at a project right now that I'm visiting, and they want to walk these projects, understand what's going on, understand the process, the scope of work, material budget, labor budget, and then put it all together. And that's what this bus tour, that's what we do here, is we help them put it all together and just have a really 30,000 foot view of actually how a rehab project from start to finish actually works and how long it actually takes. And we go through that at the bus tour. And then my bread and butter, what I'm really good at, like you said, Chris, and what I have a lot of experience and what I truly believe in is turnkey rentals and rental properties. I offer turnkey rentals for people who don't want to go out and find the real estate, don't want to find the property manager. They just want an asset that produces cash day one, and able to offer that to our students and clients and help them get involved in the turnkey rental and buying a rental property. And for some people, it's not just, hey, you're not making this, it's not 15% on a private money deal or lending your money at 15%. You're making 10 to 11%. But the overall leverage position of a rental property long term, your returns can be somewhere 25, 30%. If you look at depreciation, appreciation, cash flow, and if you're getting a note for that property, principal pay down. But if someone's using a retirement account like some of our clients have, and they buy a rental property with a retirement account, there's other returns involved in that. And they're growing that at that position, and they're growing it sometimes tax deferred or even tax free, which people love that word tax free. I know I do. I don't know about you, Chris, but I love growing my retirement if I can tax free, if there's any way possible to do that.
And dude, who
And
wants
that's
to
way
pay taxes?
who wants to pay tax? I mean, we want to pay taxes. We just, hey, if we can leverage our money and grow it, that's a great way to
Listen,
do
Mike,
it. And there's
pay my fair share of taxes.
Yeah.
Let's put it that
absolutely, absolutely. But that's what we do for people. And the people who've come to the bus tour have really enjoyed it. And I think, the best thing for me, Chris, is they come in and they don't understand anything, and we kind of hit them with a lot of information. But when we actually do the repair estimate and walk them through the property, and they come back and they actually hit pretty close to estimate I came up with, it's pretty cool to see, especially with people who've never had any experience in rehabs or renovations. And we teach them how to protect themselves with contingencies and, how really to analyze the deal and look at it. And, the magic number in this business as a lender, you want to make sure you're lending your money on a deal 70% less of that ARV. So if it's $100,000, you only want to lend up to $70,000, maybe a little bit more depending, but that's the magic number. And we really hit that hard to understand that. So that's something that we do. And a lot of people, their eyes open up afterwards where hey, okay, now we feel a little more comfortable lending our money.
That's awesome. I just put that in there. I had to type that. Like, a lot of times, like, it's just the simple things, Mike, that we forget because we've been doing this so long. Like, just like simple rules. Like, if you're going to lend and there's a deal, make sure you're never lending more than whatever your criteria is, and everybody's different, 60 to 70% of ARV. That's where I'm at. I've actually reduced down. So I'm doing 60% of ARV right now. And I'm just doing that because I sense some pullback in pricing on housing. So I want to make sure I pad myself just like the banks are. I just saw a matrix, Mike, and you probably know this it was like a matrix of credit unions, banks, institutional hard money, and then there was another offering, I can't remember what it was, private equity, and it showed all the rates, and it showed the LTVs and the ARVs. They all pulled back. And if the person wanted to go non-recourse, which would be the equivalent of somebody not doing a personal guarantee, let's just leave it at that, the rate jumped. It was like 2-point increase in the rate, and the amount they would lend went down 15 basis points. Yeah. Crazy. That's how valuable a personal guarantee is.
100%. And that number, 70% ARV, is that's the golden rule. And, a lot of my deals that I borrow money on, I actually fund the rehab and I borrow the first position for the lender. So they're always in a good position when they do come in, because it's just about leverage for me. And that's what we do. But that's the magic number. That's where you really want to be as a lender. And even as an investor, if you're borrowing the money, you want to make sure it's 70% of the ARV, because you want to make sure that deal is going to work. And I think you brought up something, in the beginning about exit strategies and how important exit strategies are in any deal you're in. And we always talk about have multiple exit strategies in a deal, especially if you're borrowing the money, because you don't want to ruin that relationship. And that exit strategies could be, hey, I'm going to sell it on the MLS. I'm going to keep it as a rental, refinance, pay off my lender. Those are a couple of extra strategies we use. For me, it's, hey, I'll sell it as a turnkey. I'll keep it as a rental, or I can sell it on the MLS. So it's just having those extra strategies in place are so important. And that lender feels a lot more comfortable lending money because they see how they're going to get, like you said, how they're going to get their money back, because that's the most important thing to them.
Yeah. I mean, lenders, we care about the return. And I think a lot of newer lenders, or newer people doing be your own bank, they're too lured in by the rate. I'll tell you right now, when I see a deal on PMC, there was one the other day that says 30%. I'm not even looking at it. And it doesn't mean it's a bad deal, but I get spooked because the rate's so high. I'm thinking to myself, why would they need to pay that much? Right. So I'm looking for the deals that are right in my criteria that have the lowest risk. So that's how we're doing it. And we're just building a criteria, your box of, checklist. Every lender should have a checklist. What is your parameters to keep your money safe? Some are riskier, some are more risk averse, like myself. And Mike, that's what I love about what you guys do, because you turn over a product that literally the risk is pretty much mitigated out of it because it's all renovated. Plus, you're coming on handling the management. So if you put out a crappy product and someone buys, one of your turnkey rentals, and then all of a sudden things start breaking, you're wearing the hat on that one, man. They're going to come back to you and be like, "Hey, man, I just bought this house. You're managing it. Fix that shit." So you got to put out
100%.
And I love that
like,
because it holds you accountable.
100%. And the one I'm at right now, I mean, I'm going to show you guys real quick. I'm sitting out in my truck here, but this one is going to be a turnkey rental. It's got a new roof. It's got a new HVAC. It might be hard to see because it's
can't really see it. You got that background fuzz thing on.
But it's going to have new roof, new HVAC, new hot water heater, brand new bathroom, new everything, right? New main supply line with PEX underneath the house. Some of these houses you get into galvanized steel, which is outdated. It rusts inside out. You got water pressure issues. So we go through these from top to bottom. And we do that because I like to say bulletproof them as best we can. We want to keep those deferred maintenance items very, very low for the first 5 years someone holds onto that asset, because it'll cash flow for sure. And that's our goal here. So,
well, Mike,
if
so
that
much
is,
now, you're going to be out in Dallas, right? May 8th and 9th?
Yes, sir.
Awesome. So folks, every one of the speakers today, every one of the speakers that you heard today, they're all going to be in Dallas, Texas, May 8th and 9th. I'm going to be there. We're all going to be there, pouring our hearts out, just leaning into everything that the audience needs, wants, so that they can invest properly, lend properly, buy properly, and they know, like, and understand everything they're doing. So folks, if you want to join us out there, we put the link up. Sean has been kind of helping me out a little bit in the chats, but there's mentioned if you want the recordings of this with the books and MSTV for 1 year, that's the link there. So it's normally $748. You get it for $197 today. I'll also put the link up, and I think Sean is probably busy because I made a mistake. The discount codes for Money Tank, those codes were expired. I shouldn't have offered that today, but I screwed up, and I put it in the chat that we were going to give you $300 off general admission tickets and $600 off VIPs. Shauna texted me. She's like, "Holy crap, that offer ended. If people go there to buy Money Tank tickets, they won't work." Shauna is right now trying to reinstate those. So if any of you want that, this literally, and I'm not bullshitting here, this will be your last time to get discounts on Money Tank tickets. After that, it's going to be full price. So buy them today or forever. Hold your, what would be that terminology? Hold your peace forever. Anyway, you know what I'm trying to say. But with that being said, folks, thanks for joining us. If you want to book a call with Craig for the BYOB, be your own bank, Craig put his contact up there. You can get on his calendar, talk to him. Mike will be in Money Tank. Mike, you want to put your contacts up on there in case they want to talk to you about the next bus tour?
Yeah, I will do that right now.
Perfect. So Craig's got it up there. Kevin, you got his. We put that up earlier. So folks, all I want to say is thank you so much. I know we went about 6 minutes over today. Thanks for sticking with us. We still got 124 people. We reached almost 200 people today. So it's such an honor to be able to bring every one of you on this journey to show you what we have learned, in most cases, the hard way. And now we can pass that wisdom on to you. And that's what our goal is here. That's what our goal is at Private Money Club. And that's what our goal will be at Money Tank, Dallas, May 8th and 9th. Or if you come out for a VIP, it's 7th, 8th, and 9th. Thanks for joining us for this edition this week of March Money Madness. We'll see everybody really soon. All right, so I hope you guys enjoyed that episode. We're putting up tons of them, but I think if you like this one, you'll probably like that video as well. Not only that, I've got a book that I created, Mapping Out the Millionaire Mystery, where we actually show you what the wealthy do in the game they play with money. I want you to have that for free. And if you want to know about all my new videos coming up, click that alert button. Actually, smash that alert button, and you'll be notified every time we put a new video. So we'll see you on the next episode.